Let's now focus on earnings. Arvind came out with their earnings. Their profit after tax was up 14% at 90.5 crore rupees. Sales were up 19% to 1,754 crore rupees. To talk to us about the earnings, we're joined by Mr. Sanjay Lalbhai, CMD at Arvind. He is joining us on the phone line from Ahmedabad. Arvind also has decided to demerge its realty business. But Mr. Lalbhai, let me first begin with your earnings. Can you tell us what the margins were like in this quarter?
By and large, as per plan, I think there is a small decline in margin in textile business, because we have increased our wovens capacity from 110 million to 130 million, and we are reshuffling some of the machines to accommodate this kind of expansion. So we had a little lower contribution because of that, but that will get corrected in Q2 and Q3.
Right.
So otherwise the margins have been as per our plan, and the margins in brands and retail business have marginally gone up compared to previous year.
When it comes to the revenue growth, what was the performance in the textile business?
Textiles has grown by 15% and brands have grown by 29%.
All right. Want to understand what's the plan for Mega Mart? You're seeing good traction in your branded line. What about your retail business? You think Mega Mart will also turn around? What's the plan for that?
See, Mega Mart is already EBITDA positive. Now at the net level, it will become positive next year. We have launched a new format called Power Mega Mart, which is a 10 to 15,000 square feet new store. And 25 of them are already operational and earning us an extremely good profitability at the store level as per our plan of 18 to 19%. So I think as more Power Mega Marts come in and as we weed out the smaller Mega Marts, I think going forward next year, Mega Mart should become a profitable business at the net level. At EBITDA level, it is already profitable.
Right. There was also the news that you announced that you'll be demerging your real estate business. What's the turnover in the real estate business, and what is the total area being developed in your real estate business?
See, currently we have 11 projects getting executed. The total square feet area to be constructed is 5.3 million square feet. We have also a land bank of 360 acres of land for development, and the total turnover for all these projects in the coming years could add up to 2,600 crores. This year we would complete around 100, and our top line would be 150 crores, and with a decent PAT level.
Right.
The accounting of real estate only happens when you complete 25% of the project. So sales are way ahead of the 150 crore top line which we are suggesting, and in the coming years this business would become a sizable business.
What's the rationale behind demerging it? It's doing well. Why a separate company? And you're also going to list this, isn't it?
Yes, see, it is unlocking of, we have a conglomerate discount. We don't have the right kind of value for our, it doesn't get reflected in our prices of share prices, because we are considered to be a textile company, whilst the PE multiplier and valuation of each of these businesses would be higher than the sum total, So if you segregate them and if you give them autonomy, and if they are allowed to grow by sourcing capital from the market and also leveraging their balance sheets, they'll grow faster. Whilst as a division, it was not getting allocation of capital from the conglomerate because we had other priorities. So once it is segregated and it is in the hands of the existing shareholders, it will be allowed to grow logically and at a faster clip than it being part of the conglomerate.
Right. On the business as a whole, I want your outlook for revenue growth for FY15 as well as export growth for FY15.
See, we are growing at 20-25%. I think exports will grow by 15% in textiles because that's our capacity constraint. We are not adding any more than what we have already added. This year, I think our wovens capacity will go up from 110 million meters to 130 million meters. So that's the major growth which is likely to come in textiles. Over and above, our knits business is growing by 30%, and our garments business, the garmenting, is going to grow by around 30 to 40%. So these are the three growth drivers which will increase our total exports by 15%.
Right. Mr. Lalbhai, one last question. We wanted your reaction and comment on the labour laws changes that the government is keen on bringing. The cabinet has approved some changes in labour laws, and now the parliament will also deliberate on this. What's your reaction to this?
No, I think they are very welcome. I think some good changes are likely to come. At the same time, they are also going to empower the state governments because it's a concurrent law. So each state will vie for more, industry to come into their states. And as a result, I think the states will be more liberal in coming out with more progressive labor policies, which Gujarat and Rajasthan have already done. So I think very good changes are coming about. And this will greatly help the garmenting industry, which is extremely labor intensive, and it requires the labor flexibility to create scale. So we are very buoyant. We are going ahead and creating scale. We are setting up one garment facility which will produce 15 million garments at one location with almost 7,000 to 9,000 women workers at one location, put up in dormitories. So we are very buoyant. We are very, very positive about these changes. And as a result, large-scale garmenting capacity will come into India like it is in China.
All right. Thank you, Mr. Lalbhai, for speaking to us at NDTV Profit and sharing with us more details of your earnings posted in the first quarter, as well as a reaction to the labour reforms that the government is trying to initiate. We'll slip into a break at this point of time, but when we come back,